Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody. Welcome back to another live stream. Happy Wednesday. Thank you all for joining us today. We're going to hop into the market here with Nick in just a second. But of course, we want to check out how some of our assets are trending to start the day because we like to see what is moving and what's not. So EURJPY, CAD-JPY, CHF-JPY, USD-JPY, GBP-JPY, NZDUSD, Aussie-JPY, basically every yen, that is every yen cross that we have listed here in the Edge Finder is up on the day so far. EURJPY being the biggest mover to the upside so far, up 1.36%. And then down here towards the bottom, I'm seeing AUDUSD, AUD-CAD, AUD-CHF, gold, NZD-CAD, NZD-USD. So 3 Australian dollar crosses down here towards the bottom. These are our 3 biggest movers to the downside so far today. AUD-USD being the biggest mover to the downside so far. So quick update on our biggest movers throughout the market so far today. But before we turn it over to Nick, I want to show you guys something really quickly. Go follow us on Instagram and Twitter, by the way. We've been doing a lot of really cool announcements. We have giveaways going on. We have something coming in April. What could it be? We have this thing that Nick talked about yesterday. We're holding a convention in Atlanta with Oanda. That's something that we're super excited about doing. We have I'm throwing Chandler for a loop here. You know, if you follow us on Instagram and on Twitter, we do fun things like announcements. Like, did you know that we're doing giveaways all month long? We had a March Madness giveaway. We're giving away an Edge Finder, but we're also doing a VIP Discord and Edge Finder bundle giveaway where you can enter there. So Chandler, if you don't mind dropping that giveaway link, because we do have 2 more days until the giveaway is over. So we do have a little bit more time for you to enter. We'll pick a winner at the end of the week. But yeah, go follow us on Instagram and Twitter. We have a lot of fun stuff going on over here at A1 Trading. But with that, let's turn it over to Nick so that we can go live into the markets with him. Here we go.
Good morning, everyone, and thank you, James, for that introduction. Guys, small little detail, and only the regular true fans are really going to recognize this. Little different theme here on the editing side or the live stream side. This is so cool. You may notice that today we've got the camera just slid into the bottom corner instead of taking up a whole chunk of the screen. It's just sort of smaller. Let me know, guys, do you like the smaller camera? Because what it does is it allows us to blow the picture up a little bit more, the charts up a little bit more so that you can see things a little bit better. I hope it's a little bit more readable to you guys. I know that, just watching these streams from your phone, things can be a little small. Hopefully this new layout is a little bit better for you. We're going to continue to tweak using the new layout features that we've got on our streaming software so that we can improve the stream for you each and every day. If you are a regular stream viewer, then thank you for being here. We are back in the markets for another one. And a couple things I want to talk about. Excuse me. Still getting over my cough a little bit. Wow. It is a fantastic start here to the pound USD in terms of, we talked about the pound coming up and nailing the top of this, right? Trying to break out to the high side and has since reversed a little bit. So you can see a big wick here on the top, price reversing strongly to the downside here, and now threatening to try and break to the downside on this upward trend. It's a pretty impressive, uptrend that we've seen recently on the pound USD, a real rally that's been going on. The question is it going to last? And when we look at this 4-hour chart with that rejection, is there the potential that we roll over further? That's kind of where we're at. Look, we got another, that's so cool. We're updating the live stream feature or templates as we speak so that you guys can see things a little bit more clear on the screen. But yeah, I can't see currency pair name. The currency pair name, oh, is it slightly cut off? No, it should be good now. We're adjusting for you. Don't worry. All good. Anyways, my thought process on this with the pound USD is that really if we're able to get some momentum to the downside here, like for example, if we're able to break through this low, this would kind of be a notable spot for me because again, we've got past resistance that turned support here on the way up. We had this rejection candle here, but the question is, are we actually able to start breaking through those levels of support? And if that happens, I actually have an interest on the short side for pound USD. So we'll see if we can get some momentum up if we're able to break a level like that going into today's price action. Now, I want to show you guys in terms of news volatility. We'll go to forexfactory.com just for a second here and see what's on the horizon. And you can see today is blank. This week is actually relatively quiet in terms of market news. So if we take a look around, you can see we have GDP numbers coming out on Thursday. That's probably one of the bigger ones this week. We have some core PCI price index numbers, which of course has some impact on like inflation readings, which are important. Last night we had CPI from Australia came out 6.8 compared to 7.2. That's a pretty significant miss, which might explain, guys, why the Australian dollar has fallen pretty hard. And actually, this is cool because I'm short Aussie dollar. You guys remember my trade yesterday? We are back. We are back in the game, guys. If you were watching my live stream yesterday, I mentioned that I had shorted the Australian dollar. And I'll be the first one to say I was a little bit early on this trade. Shoulda, coulda, woulda waited for that 61.8% retracement. You guys know we love the 61.8% retracement. Drawing fibs here from the swing high to the swing low. I actually entered off the 38.2. So I was a little bit early, but so far we're back in the money. We are back in the blue if you're talking Forex, back in the green if you're talking stocks. The stock traders know most brokers in the, MetaTrader is notorious for having blue profits, and stock brokerages mostly go like lime green side. It's, I don't know, just a weird, when you do this stuff for like 7-8 years, you start really paying attention to some weird random little things. Anyways, I'm still short Aussie dollar and I like this trade. I am holding on for dear life. We did not get stopped out. Stop loss was, I gotta say, even though my entry was not great, my stop loss seems to have been in a pretty good spot because we avoided getting stopped out here. We avoided this run to the upside here, knocking us out of the trade. We're still in it and now back in profit. So going forward, can't see the top of your screen. We should be good now. Let me know, guys, if you can't see anything on the screen. Again, our new template, we're formatting it a little bit differently, but it looks a lot better, I think, now. We've got a bigger a view of the chart. I just shrunk down that camera, put it in the bottom left. Well, I didn't, but the producers did a good job with that. And now I think it blows up the screen a little bit more. You guys can see more at once. So currently, let me update my position tracker so you guys can see I'm still short the Australian dollar at the bottom of the screen. I am no longer long gold. We are out of that trade for a profit. That trade closed out for a profit here today, and which is awesome. So we are no longer. I'm sorry, not today. A couple days back, we closed out of gold for a profit. Speaking of gold, let's see how things are developing on the gold chart. Resistance 2000 continues to hold for now. Right, we have not been able to break above that. And in my opinion, I've mentioned this. If you've been watching the streams, you know I'm interested in potentially getting long gold again if we double back to that 1935 mark. And I've been patient on this one all week. I haven't touched it. I haven't been able to get into gold. Where we currently sit, no interest for me on gold. But one of these extremes, lots of interest arises. Guys, if gold gets some volatility, I'll probably be trading this. And I'm going to do something here today that is particularly special. We're going to actually do a quick offer to everybody who is here with us right now. What we're going to do is if you guys would like to join our Discord, let me show you the Discord really quick. In the Discord, you can see trades being taken. We share all of our trades. Myself, Frank, we've got Ivan in here as well. And we are doing coaching webinars. We have chat room access going on, all sorts of good stuff. And today only what we're going to do is this is just a short time offer. If you are interested in checking out the Discord for today free, the premium, right? The access to trade alerts, signals, coaching webinars, chat room access. If you'd like to check it out today, here's what you can do. We're going to drop a link in the chat right now to where you can connect with one of our support reps here at A1 Trading. To get access, here's what you got to do. Click that link and it's going to pull up a chat icon. It's going to look something like this. Hit chat now and just ask for the free Discord trial. Okay. For those of you guys who are interested in joining our community, if you want to get access to the signals, see what Frank and Ivan and I are looking at, trading, talking about, if you want to jump into the action today with us, we're offering it today for free only. So head over to that link that we just dropped in there. You can see it in your direct message. Click that link. Hold on. My talk to is open. Give me a second to close that. There we go. Close that. So, okay, if you guys want to take advantage of that, click the link that's just been dropped and ask for our free Discord trial. Okay, click that link. Just go like this, and then just say VIP, and then just ask for a trial. You're going to connect with a real person who is going to be on the line, and they're going to hook you up with access to try out the Discord. So would love to meet some of you guys in there. If you're interested in joining us, there is a way to try it out today. And again, that's today only. So take advantage of that if you've been thinking about it. And there we go. We'll continue on with the show today here. See if we can find some stuff to go look at a little bit closer. I mentioned I am currently short Australian dollar, US dollar. I am no longer long gold. So on the position tracker channel, if you don't mind just removing that gold trade because I'm no longer in that one. I think Frank might be out of gold too. We might hear from him in a little bit as well, just to clarify where he's at with that. Anyways, let's take a quick look at the indices today. The indices actually making a move to the upside, and this is big, you guys. Look at this, S&P 500. Big green daily chart candle coming in strong, which is a very curious situation. We talked about this yesterday on my video. I mentioned that I am hesitant. I've mentioned this many times. You guys know if you're a regular, I don't like shorting the S&P 500. I don't like doing it. If I'm bearish on markets, if I'm risk off oriented, meaning I think that the markets look dangerous, pessimistic, I'm more prone to buying the dollar than I am shorting the indices because the indices are inherently full of companies that make money and tend to over time do well. So I don't like to short things like that personally, just a personal preference. I know some people love to short indices. They make great money doing it. I'm not saying it can't be done. It's just not what I personally like to do. I prefer to be long the dollar if anything else. So anyways, the S&P 500 today on the 4-hour chart looks really impressive. We are actually breaking above and on the 4-hour candles, closing above key levels of resistance here. This is promising. And I'd like to go look to see on the Edge Finder if we're getting any interest on the watch list side of things. Let's go take a look here. And we don't yet have any confirmation. I'm going to go indices. I'm going to look at my favorite to trade, which is the S&P 500. And let's see where we're at with this. Okay, we still have a -5. Why do we have a -5? Well, the fundamental factors are still pointing bearish. For example, interest rates just went up to 5%. We're still at a very high level of interest rates. This is still very crushing to US stocks. If that interest rate does cut, oh my goodness, we will be long till the break of dawn. Okay. We'll be long till the break of dawn. Doesn't even really rhyme. That's how long we're going to be. But we're not there yet. The Fed is still very hawkish overall, comparatively speaking. We're still at 5% interest rate hikes, and they're talking about potentially doing more rate increases or rate hikes, which keeps me away from buying the indices, to be honest. Long term, I'm buying indices right now. But short term for trading stuff, no purposes to do that right now. At least in my take. In unemployment numbers, unemployment ticked up recently. That's a little bit sketchy as layoffs potentially can compound. They can get bigger, they can get worse if recessionary stuff happens. Inflation is down. That's a bullish indicator, right? Inflation continues to tick lower, which is great. We're just watching closely things like unemployment and interest rates and that sort of thing. GDP growth. So we had a GDP growth decline in our most recent reporting. I believe that this is expected to increase in the next quarter. We'll see, but just some stuff to think about. In terms of institutional positioning, still a lot of short interest. So trust me, guys, this is one I keep an eye on very closely. If you know me, you know I love trading the indices long, but when the trade is not there, the trade is not there. So retail traders, slightly short, not really too much bias there. So I'm watching for impressive moves on this, but not quite ready for a long trade. And you guys will hear me talk about it. In fact, I won't shut up about it when it's time to go long the indices, in my opinion. Ivan says, "Can I get a free access to the Discord today?" Ivan, you are a funny guy because you are literally asking for access to the Discord when you, sir, are a market analyst within the Discord. That makes no sense, Ivan. You gotta, I don't know, man. What are they feeding you over there? I'm kidding with you. Ivan's great. He does our coaching webinars. He does an amazing job with that. We have so many people who speak very highly of Ivan's coaching, and that's something that he really is a specialist on. If you guys have never done a coaching session with Ivan, whether on a one-on-one basis or in a group setting within the Discord, I highly, highly recommend it. They're awesome. I watch them back every once in a while, and it's always so packed full of value. Ivan lays it down. I definitely think it's great. Let's take a look at some more pairs. I mentioned the pound USD. We haven't talked about the euro. What's going on with the euro here recently? So the euro broke out, and look at this, guys. Euro is unrelenting right now. Came back. This is beautiful, simple price action. Rallied higher, right? The euro is nothing to mess with right now. Can I get in the Discord now? If you missed what we said earlier, if you're just tuning into the stream and you guys would like to check out the Discord today, we are doing tours of the full version. You can get access to the trade alerts, the coaching webinars with Ivan, everything today. If you want to try that out, click the link that's being dropped right now in the chat. You can see a link that was just dropped by my producers. Send us a message on our direct messaging application there. This is what it looks like. Send a message and ask for the Discord trial. Just ask for a Discord trial, and one of our support reps can help you out with that. Okay. So if you're interested in that, we've got people on the line who can help you out. Now, guys, we're going to take a quick commercial break. We're going to hear from James about one of our sponsors who make these streams possible. And then we'll come back. We'll talk a little bit more about this very interesting move on the euro. After you, James.
Thanks, Nick. A1 Trading is excited to finally announce our official partnered prop firm, and we've got a pretty awesome offer for A1 Trading fans today. Superfunded is a new prop firm to enter the space that is looking to fund profitable Forex traders. If you have the skills but lack the capital, Superfunded is the answer. With super funded, traders are able to take an examination to prove their trading skills and have up to 90 days to pass. Super funded is ideal for both swing traders and day traders and even allows traders to hold their positions over the weekend. Super funded is a funding program powered by 8cap created for traders by traders. So if you're looking to get funded, check out their examination today and get 10% off that examination fee when you use the code A1 Trading. Click the link in the description below to get started. Remember, Super Funded is a brand new prop firm coming to you from 8cap. So if you're fans of 8cap, if you trade with 8cap, the brokerage, then you will definitely love Super Funded. Look to become a funded trader and get 10% off whichever examination fee you choose. They have all kinds of different examinations for different sized accounts. But regardless of which one you choose, you can get 10% off when you use code A1 Trading. So go check them out. Click the link in the description to get started. Now back to the show.
So you guys blew up the live chat feature so much, asking for access to the Discord today, that I'm just going to ask Chandler, if you don't mind asking Frank to help Hallie out. We have so many people asking to get into the Discord right now. If Chandler or James, one of you guys, would just turn to Frank and ask him to hop on the talk to help out with that, that would be amazing. We just had a ginormous surge in people who want to check out the Discord today, which I think is great. We'd love to have you in there. And, it's a lot easier for me to stand here and look pretty and ask everybody to do that. What's up, James?
I'm on my way, live stream people. If you go click that link and ask for a Discord trial, you might be talking to me next.
Literally,
so go click that link, get a trial to the Discord. I'll get you set up with that.
What a guy. What a guy, guys. We got James in the house. We would not be functioning without a powerhouse like James in here. He's going to hop on the talk to. James, I don't know what James doesn't do, to be really honest with you. He does everything. He edits the A1 trading videos. He shows up on the live streams. He's an amazing dancer. Just kidding. I don't know. He might be a good dancer. He's very tall. That's one thing about James. If you saw a picture of James standing next to me, you probably wouldn't see me in the picture. That's how tall he is. I'm just kidding. And I'm not that funny. I'm just full of dad jokes. Good morning, good afternoon to everybody who's here with us. Hope you're enjoying the show. And shout out to all of you guys who came on our live chat on our website just asking for trials. That's amazing. We'd love to have you join the Discord for the day. Come join the action. And one last time, if you are not already set up for the Discord trial, click that link that's been dropped in the chat. We'll drop it one more time. Ask for a Discord trial, and you might be speaking with the one and only James from A1 Trading. So we'll now take one moment here. We'll hear from, we'll bring in Frank, see what's going on with Frank. Hey, Frank, how's it going?
Hey, what's up?
Hey, are you still long on gold?
No. So I got trailed out.
Okay.
When price came all the way back overnight, but I actually, well, to answer your question, I guess I just entered a new one, about to send a signal that I bought gold again.
Okay.
And a key indicator for that was, I keep coming back to this, but bond yields, they're very back and forth. In this case, like right now they're up close. They're about break even, but they're slightly up for the day. Yields are just very volatile this morning, and gold is kind of doing the same way, but overall trending upwards, and lower bonds would be good for both market and gold.
That would make sense.
But a weird situation right now is that bonds are just all over the place, and just looking at the instability of it right now is kind of convincing that like maybe today is more so a market day and less of a dollar day. But either way, I'm looking at gold, because gold kind of just looks like a buy either way. So huge rejection. And so, yeah, right now I'm just focusing on gold, looking at that $2,000 mark.
What do you think about this dollar yen? So with the yields that you just mentioned, yields popping has a very strong correlation in tandem with the dollar yen. A bit of an impressive run here on the dollar yen. What do you think about buying a pullback on that? I think personally, I kind of like that.
Yeah, so it's hard because dollar yen and market and like the S&P I mean are very like close right now in terms of like correlation. So it's weird to be long dollar and stocks at the same time, I guess. Um, but that's just kind of the case right now.
Hmm.
Um, I'm overall bullish dollar just because the Fed is continuing to raise rates. They've also projected like an end to their hikes at some point. So investors are relieved for that. Um, so right now the dollar's just in a very weird spot. I still like dollar longs. And if I were to do any kind of dollar trade, it would probably be dollar yen just because it's more so focused on yields and um, just also correlated with the stock market
Yeah.
as of recent. So this is the correlation coefficient. Right now, it's at like 90% correlated directly with the S&P. So
Yeah, that
very
makes sense.
interesting case there.
Well, and I'll show my screen for a second, Frank. I want to show you something with dollar yen. If we take a look at this, if you could see this, I really think that you've got almost everything on the edge finder currently pointing towards a buy bias on the dollar yen. The only thing it's missing is this trend reading, which if
Right.
we stay trending up for a couple more days, that's going to flip to the other direction because all it uses is a combination of price action and moving averages. And then when we look at something like dollar yen, again, it doesn't take too many days before this thing starts to sort of turn into an uptrend. We had a nice break to this sort of upward, I'm sorry, downward structure where we have like these lower highs and lower lows. We now are seeing that kind of be threatened. And I think if we take out like 133 on dollar yen, that just leaves like a lot of room to the upside. So we'll have to
Right.
continue to watch this one. But yeah, good points on the yields. And of course, keeping an eye on gold here as well. Frank, thank you for jumping in on the live stream as always. And if you don't mind checking out the talk to, poor Hallie is getting bombarded. So
Yeah. That's
thank
true.
you for helping out with everything as always.
Yeah, thank you.
All right, see ya. Yeah, so you guys, we've got like a carousel of people going on in these live streams nowadays. It's somebody said in the chat that these dad jokes gotta go, and I don't know. As long as I'm here, they're not going anywhere. It's just the sad reality for people who don't like dad jokes. For people who like them, hey, stick around, hit the thumbs up, subscribe, all that good stuff. But dollar yen, I was talking with Frank just a second ago about this, and to follow up with our conversation there, a nice pop to the upside here today. And now we've got to continue to roll forward what we've been saying. For the loyals, you guys know I've kept an eye on dollar yen for, well, weeks now. But it just started going so bearish, and there was just nothing for me to do for a very long time here, in the last week or so. But this move today shows evidence of a potential turn in the market. Now, again, we still have to acknowledge that sellers have been very strong in this market, and we're tagging levels of resistance. And so far, to the bears' credit, this level is held. But if you start seeing the failure of resistance, that's early signs that an upward trend is likely forming. So if we get stuff like this, I think one more break above a level of resistance, notably that 132.5, if we can break that level, very, very interesting. Looking for pops to the upside, pullbacks, and continuations. Look at AUDUSD now, Darmian says. What's going on with Aussie dollar? Oh, it popped back the other direction. I'm still just about break even on my trade. I am currently short and looks like it's having a little bit of sympathy with the stock market rally that we're seeing. These two moving together. And of course, also a little bit of gold correlation. I'm sorry, market veterans know that there are, in many cases, some correlation between gold and the Australian dollar, as they're a major export country, right? They do a lot of exporting of raw materials. They do a lot of trade with China and, all through the Pacific and that sort of thing. So I continue to hold this short. We'll see if we're able to catch a little bit of a move to the downside there. Again, my loose target, quote unquote, not necessarily take profit, but where I think price could go if we get a good run going on the Australian dollar to the downside would be a move back down to levels like 0.6573, which is this previous low that we tagged in. What is that? Is that early March? Yeah, early March. So we'll see if price can get a little bit of break to the downside there. It held the 61.8% retracement very well. We will just have to see if it is able to continue to push in this downward direction, or if it's going to fail out and go higher. My stop loss is in place. If we break to 67.20, I'll be out of the trade for a small loss. No trades on gold currently. Still waiting to see if I can get that entry. If I get that entry, remember, I will be sharing that information in Discord. And one last time, in case you missed it earlier, we are doing Discord trials today. If you want to check out the Discord and see trades being taken by myself and Frank, who was just on the camera, make sure to click the link that's just been dropped in the chat. It'll allow you to chat with one of our support reps directly, who can get you access to the Discord today. So just send the word free Discord trial or check out the Discord, something like that. And one of our team members who is on the line right now will set you up with the Discord access. So there you go. Frank is buying gold again. Oh, what a crazy guy. He's getting involved. Guys, if you're not on the Discord, Frank just dropped some hot and fresh stuff in his channel. So if you're not already in there, join us. Click that link that's been dropped in the chat and ask for access to the Discord, and you can get a trial. So yeah, we'll see if I'm able to catch anything in this Aussie dollar trade. Continue to watch it, and we'll go from there. Now, guys, we're going to turn our attention to our next guest, who's going to take over the show for a little bit here. We're going to say hello to Mr. FxBigDog, aka Gary. What's up, Gary? How are you?
Hey, hi, I'm doing well, man. I had a good weekend. Did you have a great weekend?
I did. Did you spend some time with family? What's the weather like in Florida?
Florida weather is fantastic. I played golf, and we played a member tournament this weekend, and we ended up winning. It's a 3-day tournament.
Hey,
nice. We ended up winning it, so it was pretty good. Yeah,
that's awesome.
That's awesome. And at 53 years old, I'm taking on these guys that are 26, hitting the ball miles, and we still managed to cash in. So
well, Gary, it's because you look just like him. You still look just 26, just like him. So you know what? You fit right in with the rest of the crowd. Gary, if you guys don't know, has been coming on the show for I guess well over a year now. He's been coming on, taking over, hosting for a little bit. He has his own amazing channel full of content and stuff that he does. If you guys would like to connect with Gary more, he's a trading veteran. He's been doing this for a long while, and I would highly encourage you to check out his stuff if you have not already. We're going to drop a link while we get started here. If you'd like to check out his channel, you can subscribe, click that link, go check him out, show some love, all that good stuff. If you enjoy what you see here with Gary taking over the stream. So Gary, you know the drill. Thank you for coming on, and we'll catch up with you next time.
Appreciate it. Thanks, buddy. Have a good one.
See ya.
All right, guys. So what is going on with the market this week? Well, the focus this week for me is that we're in a risk-on trading environment. What does that mean for everyone? Well, it means that if we take a look at the chart right here, a risk-on environment means that we're going to see some bullish in stock market, and this is where I'm looking at more of a midterm outlook, right? So I'm not saying in the short term we might get a little bit of a change in the market momentum. I'm just saying that we're in a risk-on trading environment, and this is going to go on for a couple of weeks, I believe. That means, of course, that we should be seeing some sell-off on the dollar, some sell-off on the JPY, sell-off on the Swiss franc. And that's great because there's some of the pairs that I'm currently trading right now that is really, really hot for that sort of movement. Now, this might be a little bit of a shock, but if you look over here, you can see that we're looking for the New Zealand dollar to actually start rallying. We did see a little bit of rally in the last couple of days, but over the last few, probably 24 hours, we've seen a really strong downside move on the New Zealand CAD. We'll go ahead and take a look and see how that plays out, because that's not falling in line with our risk parameters that we're looking at right now based on risk on, risk off. So we'll certainly go ahead and take a look at that and see how that sets up technically, because I believe we're at a very key support level on the New Zealand CAD that might open up opportunities. So with that being said, let's jump into the first thing that Nick mentioned was that there was a buy on gold. Let me go ahead and give you my perspective on this. This is currently sitting, if you look over here, you can see that there is an internal wave right here. And so, yes, we do expect gold to go up a little higher. What's happening right now, we're in what we call a fourth wave range. And this is the most complicated wave to actually trade, because sometimes you have what they call a little fake out. And so if you look over here, you can see it's wedged up over here. And I'm going to change this to there. Go up a little. Yeah, that's fine. So we can see that we're a little wedged up over here. And this is very common in a fourth wave move. So this is not uncommon to see this type of movement, but we do expect a breakout. Now watch out for the fake out, which means that we might see a little fake out right here, and then the market starts going back up north. But ultimately, we are expecting price to move up a little higher. We always mentioned that we're looking for price to go to that 2020 mark. And then at that point, we're expecting the gold to actually fall shy of this level right here, and that's around about, let's say, 1800, right? About 1800, maybe 1815, around about there. So this will be the downside move towards that level after we hit that 2020 level, so 2020 level right there. Now, with that being said, let's go down to the lower time frame. Let's get a quick little look on what's going on here, the lower time frame. Here is the 1 hour, and there you can see that consolidation, how the market's wedging here pretty clearly based on this move there. You can see there we've got some highs, and then here we've got some lows sitting up over here. The market's still trading above the 200 EMA, so which means that we're expecting bullish movement based on the trend. And if we look over here as well, we can also see that the market created this 1, 2, 3, 4, 5. Oh, it looks like we might be in a range a little bit longer. And I'll tell you why. If we have an early breakout, bonus. But if you look over here, the market's gone ahead and created this 1, 2 right here, 3 down here. We're looking for price to go up a little higher up here. This will be 4. We need a fifth wave test and then a breakout. So my speculation on this is that we're going to see price of gold rally up towards right about just shy of 2000, and then it's going to hold up at this area. We're going to come back down here, and then we're going to go ahead and take off. So it's got to complete this five-way structure in this wedge. So this means that we're probably going to see gold a little more range bound for a little bit longer before we actually see that breakout take place. And then the breakout will go ahead and target the highs up here at the top. That's where we're looking for a gold to go ahead and target. So that's, and I'm going to go ahead and put a level here. This is the level that is looking to trade above. And you can see that is around about 2010, but 2015 seems to be the upside target. All right, now, with that being said, let's go ahead and take a look at some pairs that we've got sitting up on the other pairs. I mentioned the New Zealand CAD. The New Zealand CAD right here is currently right now breaking out of this, well, it's been testing the boundaries of this wedge for some time right here, but we're now breaking below this upward trend line. And so it's breaking below right here. And if you take a look a little further down south right here, you can see that we do have quite significant support right here. Now, we mentioned this a while back, and we mentioned that price was going to drop down to 84.49, and that was when it was trading up over here. And it did go ahead and drop to that level right to the pip, and then rally back up, retest that 200 EMA, which is another example of the wave structure that we've seen right here. We had double tops forming here at the top, and then the market's broken down south again, and we're finding that support holding once again. You see how price is rejecting that level. Now, I think we're going to get a little bit of a pullback, but I think that the overall momentum on the New Zealand CAD may end up being bearish, and we're going to end up breaking through that support and seeing a deeper move because we're chasing after the market's lows down here, which is around about 83.63 right here. So we're probably going to expect some further downside move. Now, let's go to a daily time frame. Let's take a look at the bigger picture. And this is the bigger picture right here. Notice that once again, we have this 5-wave wedge setting up right here. And this is the reason why we're expecting New Zealand CAD to fall short before we start seeing another upside rally. Is because look at this again. 1, 2, 3, 4. We tested that resistance. And now we look for price to break back below these lows right here. These lows right here. And heading down towards that trend line. So this will be probably the buy area right here. We did mention that that 82.45 could be a downside target right there as we break through that 83.30 level and as price goes ahead and tries to chase after that support. So definitely see the New Zealand CAD being slightly bearish. And if I look at my currency strength, and this is in the excuse me, in the short term. This is currency strength in the short term, which means it's taken on a 4-hour time frame, and it's based on every 4 hours that we're going to see some updates on the currency strength. So currently right now, the last 4 hours that's happened over the European session, we can see that we've got the New Zealand dollar weakening quite a bit right here. We've got a weak New Zealand dollar, and we can see that the CAD is actually going strong. And that would be obviously a setup looking for a New Zealand CAD sell-off. Now, the New Zealand CAD is not on my top 8. If you see over here, I don't see the New Zealand CAD on my top 8. We do see Pound Aussie and then Euro Aussie. So this is also giving us an indication that we've seen some weakness coming out in Aussie right here. That's given us a two of the top pairs right here traded against the Aussie. In fact, actually three of the top 8 right here are showing Aussie being bearish. So this is absolutely so. Pound Aussie, Euro Aussie, Aussie CAD is a setup. Now, if I go over here, I can see that I've got Aussie CAD setting up over here on my dashboard down below. I can go ahead and click on this, and you'll see a little bit of a different view. So Aussie CAD right here shows bearish channel, solid resistance, strong bearish, and bearish right here. So everything is indicating that the bearers are in control of the Aussie CAD. That means that might be a good setup. Now let me go take a look and see the Pound Aussie. If we're getting anything set up on the Pound Aussie right here, Pound Aussie. Let's see. No, where's Pound Aussie? Oh, there it is. Pound Aussie is neutral at the moment right now, so not really getting any signals on the Pound Aussie as of right now. And then the Euro Aussie, I'm not seeing. Oh, look at the Euro Aussie right here. Euro Aussie is also showing bullish, so buy support right here. So bullish channel, buy support. So Euro Aussie and Aussie CAD will probably be the top 2 right now. Let's go to Aussie CAD first. Take a look at Aussie CAD. Now, even though we're getting signals that we should be looking for a sell, we have to always make sure that we're paying attention to how the market's set up in its structure. All right, we want to see is this pair setting up structurally based on technical analysis for us to go ahead and enter. Because even though the markets may indicate that we're heading south, we have to make sure that it's the right time to want to go ahead and enter. So if we look over here, we can see that we've got some short-term trend lines that were broken right here. We are trading on the right side of that trend line, so we are anticipating some further downside move. We're not in an oversold condition, which is good. If not being oversold, that means that there is some opportunity here for a further downside move. Now, we spoke about the buy zone. We spoke about possible price moving down towards this level right here. And this is where we are going to be looking to possibly see a reversal. But until that point, we should be expecting price to go down a little lower. And this makes this even more interesting because if you take a look at the oscillator down below, we see that we did go into an oversold, then it came out of it. So this might be setting up a bit of divergence if we can get price moving lower. So this will be good positive divergence if price can go below the previous low get into a buy zone, and see oscillator showing a different move to price. So price and momentum going to show differently. And if we have disagreement between price and momentum, that's normally a good setup for positive divergence. Let's go down to the lower time frame and let's see if we can pick up something here on the lower time frame. And I'm going to pick up this right here. And so looking at this at the moment right now, let's go ahead and clean up house. Actually, you know what? Let's keep this in. This looks like the last swing that we had right here. We had a wave 1. We had wave 2 up here. Price came down to a wave 3 down here. We rallied up to a wave 4. And then we hit the 1.27, giving us a wave 5 setup right here. And then price is now going to try and target here. So this is why we don't want to go ahead and be bearish on Aussie CAD right now. We're not saying that Aussie CAD is not going to be bearish midterm. We're just saying it's not the perfect time to go ahead and enter Aussie CAD short until we have this corrective move. And so I would say that this would be more of a buy right now in the short term, chasing after price targets up here, which is going to be up here at, let's throw in a number here. Well, it looks like it's right there at the 200 EMA. So we're looking at around about 91.34. So this is where we're looking at price to move back up. So this is, we see now around about a 49 pip opportunity. Now 49 pips is really intraday scalping, right? 49 pips is not a long-term, couple of days, couple of weeks type of trade. So which means that if that's only 49 pips, then what I might want to do here is go down to a 15-minute, maybe even a 10-minute. In fact, I could even go to a 5-minute and do a 5-minute right here. And on the 5-minute, I would look at this, and all I need now is price to come back to retest this level right there. Let me go ahead and just change this up a little bit. All right, so I'm looking for price to come back down to retest this level, pull back to a retracement of, let's say, the 5-0. Let's change this as well so we can get some numbers thick. Let me get this, change this to 16. All right, so look for price to pull back. So even in the short term, it's so important to be able to identify where the market is in the technical environment, right? And so right now on the Aussie CAD, I would be expecting Aussie CAD to drop back down from, it's trading at 83 to trade back down to, let's say, 73. At 73 is going to be a buy, and we're looking at, if we enter around about 73 right here, we're looking at 91.04. So that's going to be around about a 30 pip grab right here. So if you're looking for a short-term opportunity, it will be down here at around about 0.9073, and looking for a rally towards 91.04. And that's going to be giving us that first move. This is going to be our first wave structure right here. This will be a wave 2 right there, and looking for price to go up here to a wave 3. So again, very important that you understand where we are inside the market environment, and then go ahead and gear down. I call it a gear up, gear down trading approach, where you gear down on a lower time frame to establish entry point based on what the market's offering you. And we have to be sort of like on top of it, or at least be very sharp on where the market is at right now in the short term in order to be able to enter on that move. So that's how the Aussie CAD is setting up for me for right now today. So certainly looking for some buy opportunities going long. And if I go ahead and look at the Euro Aussie, let's go take a look at the Euro Aussie. I'm going to move this back to the 1 hour. And then I'm going to go to the Euro Aussie right here. And Euro Aussie is, oh, there it is. All right, so here we go, Euro Aussie. So what is the deal on the Euro Aussie? Let's go over here. Now the Euro Aussie, I believe, was set up bullish. Let's double check on that. And yep, Euro Aussie was set up bullish right here. So what's the deal? The deal is this. the deal is this. As we look at this setup right here, the deal is we're at strong resistance right now, right? So this is the daily time frame. If this holds, we might be done with anything bullish on this. Remember, that bullish signal has been over the last 4 hours. So there's been some bullish movement over the last 4 hours, but right now we're at resistance. So from a technical perspective, Euro Aussie may not be right now ready to go ahead and rally. In fact, we may even be at a turning point where the market's holding resistance. And that's because you see right here, we've got oscillator pushing lower. So at the moment right now, we're seeing negative divergence, indicating that price could go ahead and push down lower and come back to retest the support right here and just stay in a range, because this is a fourth wave consolidation or fourth wave range. And so I would actually look at the Euro Aussie right here. I'll go down to the lower time frame and let's set up this consolidation zone right here. And based on this, if we see price coming back up here in a retracement move, we might be able to trade it back down to the support level and look for price to go ahead and drop even further. So I'm going to go ahead and say that the Euro Aussie is not quite ready to go ahead and start looking for some buys. Let me go to the 4 hour right here. Let me just go to, let's go to, I'm going to move this to a 30-minute chart right here. Yeah, and this would not be a go in any case. This would not be a go because we are currently bearish on the 30-minute right here. So yes, definitely looking for correction and possibly selling off on the Euro Aussie. Traders, it's so important to be able to understand what the bigger picture is telling you so that you don't get caught up in these type of things, because a lot of the times this looks like, oh my gosh, this is going to go bullish. Look at the trend. We're up. We're bullish. We go into chase after that 64.35. And trust me, I've been talking about that that 64.35 level. I've been saying that the Euro Aussie is going to go ahead and target that. And I still believe it's going to get there. But again, that doesn't necessarily mean that's going to be right now. Because of this resistance, it means that price is probably going to come back down a little deeper and then turn around and head up towards that target. So we've got to be patient on that. We absolutely have to be patient on that. Okay. All right. So this is where we are with the Euro Aussie. So sometimes a shining object doesn't always seem to be something valuable, right? And so as we looked at this right here and we looked at the breakdown, it seemed like this was a shining object right here, Euro Aussie being bullish, and everything indication right here indicating that we should be buying at support. We go to the lower time frame, you check it out, there's a different ball game going on, right? All right, let's go ahead and take a look at, I'd like to take a look at the, let's take a look at some pairs that are moving a little sideways at the moment right now. And that is the, let's go to the Euro. I'm going to go to Euro Pound. Take a look at Euro Pound right here. I'm going to move this to a daily chart. And I'm just going to go ahead and clean up a little here so we can get to see a little bit more on the daily. All right, there we go. All right, perfect. So here is the Euro Pound. Euro Pound is sitting at a key level of support right here. We're expecting price to go up a little higher. So Euro Pound right now, we should start seeing some upside move on Euro Pound. We had this big, strong rally, pullback, and now we're expecting price to go back up to retest resistance right here. If we go down to the lower time frame, we're already in on some buys right now. Got some buys in on this, and we haven't seen the breakout taking place. We see a little bit of an indecision candle right here. So there is definitely some range-bound trading right about there. We got resistance there. We got support down here. Market's still range bound. We haven't seen a breakout on that. So even though we are buying on this, it has not really broken out of its move yet. I want to go ahead and take a look at some Swiss pairs like Euro Swiss and then CAD Swiss. Those are two pairs that I'm actually real interested and very invested into. There it is, Euro Swiss. All right, so Euro Swiss right here is showing here on the, let's go to the daily. It's showing that we've got this consolidation right here, right? We've got this consolidation. Price is broken through this internal consolidation right here, and we're chasing after the tops here at the top. We should see the market break that. Let's see here. Is it 1.0068? Yep. We should see the market break through that 1.0068 level right there as we come closer and closer to breaking past that previous high. That previous high was there in around about March 22nd. So we're coming back to retest that, and we should see a breakout. So this is a nice little swing. I'm going to go ahead and look at the fib extension on this. And on the daily right here, we're seeing 1.0176 right here is the target. And that's close to that 1.27 that we've seen there as well. So we've seen a double whammy of resistance coming close to each other right there at the 1.077, 176 right there. Now, I'd like to go down to the lower time frame right here. Take a look at my swings. And yes, it's going to be important for us to get through this resistance. I believe we've got the momentum to get through there, but we want to see a clean break above that level right here. Right now, we're still testing that level, and so we're going to have to be a little more patient on this. I think we've got enough momentum to get through there, but we'll have to wait and see. So that's the level we're going to break through. This is the 1 hour right here, so we are testing it. We'll have to see if that's going to be the reason for the breakout. And we're going to go to the news right here. Let's take a look and see what the news. We just got some CPI data last night. That was for the Aussies, but take a look at this morning. We got pending home sales. That came out positive. So pending home sales, we got 0.8% right here, compared to what they forecast at negative 2.9%. So a little bit of an upside move on pending home sales. As we move further into the day, we see here that we are expecting on Thursday CPI data for the Eurozone in Germany, and as well as for the Spanish flash CPI as well. We're getting CPI data coming out for the Eurozone. That's going to be tomorrow. So it's going to be important to see how that influences the market as we move into the next 24 hours. I'm looking to see if we got any Swiss data coming out this week. And we do see just a speech here on Thursday. Other than that, I don't see anything else right here. So we'll see if the European data can push the market through that. So we're probably going to have to wait another 24 hours before we can see a breakout of that level. Right now, it seems like it's still stuck inside this fourth wave move, and we'll have to wait and see if we can get a breakout with that pretty soon. Let's go to let's take a look at the dollar index for a minute right now and U.S. oil. And looking at dollar index, looks like we're in a sell-off, but there is a retracement due. So even though we're in a sell-off, there is a retracement due right here in the dollar. Probably come back to retest this level that it broke out of right about there. So we will see a little bit of a rally on that, but that will only be to set it up for the next move to the downside. We think dollar's going to continue to move bearish long term, but I think in a short term. Also, I also noticed that we do have this. Look at this right here. We got this crown pattern setting up right here. We are testing the right tip of that crown, and so rally is due. I don't think we're going to see it break above these highs. I think we can get a retracement move towards that resistance, and then we're going to see a downside move. Well, let's not worry about the long-term outlook right now. Let's take a quick squiz at the short-term move, and this is this move going up right here. Let's pay attention more this week in the short-term rally. Now, we've got some data coming out this week. We know that CPI data was reported. Let's see here. Sorry, is going to be reported, not is. It has been reported. CPI data. No, sorry, my bad. It's actually GDP. We've got GDP coming out this week. This is on Thursday. GDP quarter on quarter coming out this week. We know that GDP is important. We want to see continual, upticks on GDP, especially after the government has gone ahead and once again bailed out SVB Bank, causing the Feds to once again print more money, causing weakness in the dollar. That's why we've seen some weakness in the dollar based on the fact that they're going to have to continue to print money in order to bail out the banks. Now, with GDP, if we are seeing a downside move in GDP, that's going to create a problem. If you're printing more money, but you're not making higher GDP, that means the country's going into further debt and not able to pay their debt. And that's the problem right there. So we'll keep an eye on the GDP numbers. That's going to be important tomorrow at 8:30. Now, that means that traders that, based on this technical setup right here, we might be right on the money, that a bullish move in the dollar in the short term may be expected. Now, if I go to US dollar CAD and take a quick look at this is how US dollar CAD is set up right here on the daily. Now, if I go ahead and compress the charts, we'll look over here and we see, okay, downward trend line right here. We broke to the right side of the trend line. We've broken above that. We're coming back to retest. Here's the level of support. Here at about 35.16. We could see that level has been tested a few times right here. And that when the market comes to this level right here, this might be a turnaround to the upside to come back to retest the highs again at this level there. Do we suspect that maybe price is going to move down a little below it? It could, but we could also move into what we call negative divergence here. If price does go a little higher, then this is where we're going to see negative divergence. This is where we're probably going to see price holding at around about that 1.4 thousand level on the US dollar CAD. And a turnaround may be due. We may see a short-term rally in the dollar just because of what we're seeing right now on the dollar index. Could that mean an opportunity as well on maybe stronger CAD or weaker CAD? Well, if dollar rallies, obviously that would mean weaker CAD as well. Let's take a look at US oil. US oil has been pushing. And if you look over here, we have got above that call it $71 a barrel right here. We have traded above that. But what goes up must come down. And normally it comes down when it finds resistance. Here's resistance. Market's testing resistance here at 74.25. So 74.24 is the level that we're going to see price maybe moving back down to 71 again. So weaker oil, weaker Canadians. And then we're going to see the rally taking place to $83 a barrel right here. So we do suspect that oil is going to continue to rally, but correction is due before the next move. Now, I'm going to go down to the lower time frame, and let's take a look at the wave structure on the lower time frame. So in the lower time frame, here's that $71 a barrel that we've seen right here, that price will come back to retest, or very, very much could come back to retest. But what we're going to have to see first, traders, is maybe 75 come into play. So maybe we're going to see 75 come into play, and then hold that resistance. We're also seeing a little bit of a upward wedge right here which is a rise in which we could also indicate a fall in oil, but a dip to 71 would be the next buy zone or next buying opportunity on oil. If you're trading other pairs or these crosses like the Canadian dollar, then you might be thinking bearish on Canadian dollar for a short term and then start thinking bullish on Canadian dollar as price then goes ahead and looks to chase after that $75 a barrel and maybe even higher, $83 a barrel could come into play as well. Traders, I just realized that I'm over my time. I do apologize for that. I will see everyone back again next week. Good luck with your trading. I think there's creating some great opportunities for us this week. So good luck with your trading, and I'll see you next time. This is FxBigDog signing off.
Traders, how you doing? Hope everybody's well. Let me know if I'm coming through okay. I noticed the last time that I streamed, I didn't have the proper mic, i.e. this one here, plugged in. I was using my camera, so let me know if I'm coming through okay in the chat. I see 95 of you watching here on the A1 channel. So if you're in, come and say hello. It's always good when these streams are interactive. Oh, thank you, A1. Appreciate that. So yeah, we're now at the 29th of March. So we're into the last few days of essentially Q1. So let me know how you guys are doing, how your Q1 has gone. Personally, again, being transparent, it's not always sunshine and rainbows in this business. My Q1 has not been good. I think I'm down about 4% on Q1. Again, hey, Mark, how you doing, buddy? Again, it was kind of similar to last year where I had a rough start to the year, or let's say I had a good start. I had a good January, and then February, March, April, May was a struggle for me. And then I had a great end to the year, ended up on something 44%. But yeah, start of this year has been tough. But for me personally, I always like to take an annual view of trading. Trading is not a weekly thing. If you're in the market, you're supposed to be here for a long time, right? We're here for a long time, not a good time. Maybe. But so me coming out at the bat, the first Q1 in negative whatever I am is okay, because there's a long time to put it right, and things can change very quickly in trading. From my personal experience, I've been doing this for a long time now. I think I'm in my 8th year now. Things can change very quickly. So if you've had a tough Q1, the markets have been tough for quite some time. One trade, a couple of trade a week, we can, I do believe you make your money in pockets. Things can change very quickly. So what I thought I'd do today, I'll go through, I've just been triggered into a trade just in the past hour. My first trade of the last 2 weeks, actually. I'll go through that. I'll go through the markets. I'll go through why I entered the other pair that I'm looking at potentially to trade. And if you guys are looking at anything or want me to look at anything, let me know. As I said, come and say hi in the channel. I see a lot of you're watching. Let me know how your trading has been. Maybe the last 3 months you've improved on something. It's always good to know trading is a process, and it takes time. And it's certainly not as easy as certain social media makes out to be. Hey, Vincent, mate, hope you're well. Where's everybody tuning in from? Let me know. How long have you guys been trading? Okay, so this S&P trade, I'm going to take a higher time frame analysis view first. Whenever I place a trade, I always use the concept of RTM. So I'm looking for, that's a very bad drawing, RTM, which it basically means ready to move. So I'm looking to get involved in pairs, indices, commodities, whatever it is, crypto, in an area where that particular instrument could be in the process of moving quite ways, because we're looking to get involved in trades and movements essentially kind of like this. Now, this could be any kind of pair indice, it doesn't matter. But we're looking to get involved in times, where potentially it can run quite a way. So we don't want to get involved in trades that is basically moved and looking like it may retrace or may pull back. I'm looking to get involved at the start of a real move. So if I look at this S&P, and again, I could lose this trade. That's absolutely fine. It happens. If I look at the S&P, and again, I know this is taking this chart back from that COVID drop in 2020, but looking at it from a very simplistic view here, and this is why I'm relatively bullish on indices. You know, I know I'm maybe different from some, but I'm relatively bullish on indices. And there is a facet to that, or there is a disclaimer to that, which I'll go into a second. So from this weekly chart coming from that COVID drop, it seems to me that we could be coming out of a potential pullback here. Again, looking at a possible head and shoulders at the end of this pullback from that COVID drop in 2020. So if this was a 4-hour chart, a 1-hour chart, a 15-minute chart, and it looks like this, it doesn't really matter that this is a weekly. So for me, looking at this head and shoulders, which is a trend change pattern, again, coming out of this weekly impulse, essentially impulse corrective continuation, right? So this pattern, and they may be simplistic in nature, but I like simple things. I believe the simple stuff does work. I don't think you need to be complicated in your trading. For me, looking at it, we've kind of come out of here and possibly retraced it. So retested this neckline essentially in this head and shoulders at this area. So if I go back to the weekly chart, sorry, I was on the daily here, but if I go to the weekly, right, we've created, and again, not a great one, but a kind of quasi morning star pattern here, right? So just here, the last 3 weeks. And not only that, we've got a volume signature that I like. So with the morning or evening stars, what I like to see is increasing volume as the pattern progresses. I really like looking at volume in my trading. So we've got small volume here. We've got an uptick in volume and an uptick in volume. The main proponent of this is that our secondary and third bars have got more volume than our initial bar. Ideally, yes, you'd like it to potentially be like this, but as long as the volume increases to the second and third in regards to the first, then that's absolutely fine for me. Now, the reason why I say it's a quasi morning star is because the closure on this particular week is not great. Obviously, we'd like to see a higher close. We got a little bit rejection towards the end of the week. So I'm not going to sit here and say this is a perfect catalyst, because it's not. However, what it does show is some rejection around this area. So this pattern, again, coming from 2020, coming from that larger impulse into this corrective, is still valid. You know, and if you think about the reason why I don't really use a lot of fundamentals in my trading is, well, I'll ask you guys actually, so the people watching here, what is the definition of technical analysis? Let's see if anyone can get it. And this is the reason why I love just focusing on the technicals. You know, for me, it clears my mind from any fundamental bias. But if anybody knows, put it in chat. What is the definition of technical analysis? And while someone starts that, I'll show you the pattern that I'm looking at. Now, again, it doesn't look great right now, but let's see what it does. It's not stopped out, just slightly offside. So for me, I'm a breakout trader. What I was looking at is this initial structure coming into this significant zone. So this significant zone was created on our second touch here, right here. What I look for is essentially a squeeze into an area. Now, again, that's a very simplistic view of what I look for, but that is essentially what I look for. So within our cup with handles, this is the kind of pattern that I'm looking for. And then this cup with handle within a cup with handle, increasing pressure into a significant zone before a potential break. Now, I don't have time to go into all the facets of my strategy, but that in a nutshell is what it is. So if we look at this from our significant zone here, we've kind of created secondary structure, again, tagged our significant zone, and we've come down and created our third structure here. So we've got 1, 2, 3. So for me, this pattern was valid. Again, using those higher time frames from a weekly perspective, my idea, and if I'm right on this trade, which is yet to be seen, my idea is that we push out from that weekly and daily potential end of corrective, and we move and continue in that impulse to the upside. Again, that is the basis of what I'm trying to do here. So initially, again, I've just employed a new trade management system. My last year, my stop would have been under here. I'm actually, I went through a whole period last year testing a new trade management system with tighter stops, as you can see here, in order to get more ROI at the end of the year. So, and I'll be completely honest with you. This is still kind of new to me. So I don't like the idea of putting my stop here. Now that sounds a little bit counterintuitive, but the reason I say that is because maybe we're moving a little bit too extended. But my plan and what I tested through the whole year was look for, and my 4-hour breakouts, so I only take breakouts on the 4-hour, is look for the latest anchor on the 30-minute chart. So I go down 2 time frames, right? So before, my anchor would be from the 4 hour, i.e. here. But obviously, that risk reward is slightly larger than what I've got here. Now, the win rate was a little bit bigger, but my ROI at the end of the year using my new trade management basically came out as double what I was doing. So this is what trading is, I think. You kind of get a strategy that you resonate with, and you simply improve on it over time. How do you get better with the strategy? Oh, you notice this, and in 1 year, 6 months later, you say, maybe I'll incorporate this. This is what works. That's how you improve. Mark, more focus on chart patterns and price action with technical. No. So the definition of technical analysis is everything that is known in everything that is known in the market is reflected in current price. So again, I used to trade fundamentals. I used to have a fundamental bias. And then, sometimes I get news events wrong. Again, this is when I was learning how to trade. I'd say, well, this data came in here. Technically, that should mean that this moves to the upside. And what happens? It kind of moves down and then pushes up. And, I wanted to take that away. And again, that definition of everything that is known, a lot more smarter people than me knows what's going on fundamentally. But everything that is known right now is reflected in current price. So looking at that weekly, again, I'm quite happy potentially taking a long here. So from a 4 hour perspective, as I said, a decent squeeze into the air. My TP1, i.e. 50%, so I take 2 trades, is at 2-to-1 risk reward. It used to be 1-to-1, now it's 2-to-1. And I let the second is maybe basically a runner. So 2 positions there. Let's see what happens. I like it. If it loses, it loses. That is what happens in this game. But I'm not out right now. And let's see if it does push on. As I said, this is my first trade in 2 weeks. Sometimes not taking a trade is a position in itself. Vincent, can I ask your opinion on CAD Swiss? CAD Swiss, Vincent. Okay. Let's have a look at CAD Swiss before I look into my other one that I'm looking at. I'm not going to take a lot of your time. It's actually 6:45 p.m. here in Dubai. So it's almost time for my dinner. CAD Swiss, you're in a sell. I mean, overall bias for CAD Swiss has got to be short, right? So I like the bias of a short. I do like the bias of a short. And also, this is a good thing of how I trade. This is where I'm looking to get involved in. So if you think about the 70-30 rule, which is markets trend 30% of the time, markets range 70 or pull back 70% of the time. So we've got a good movement here. And then we've got this period of consolidation, ranging movement. So I'd be looking to try and get involved basically here. That was my idea of each trade that I take. So overall bias I like. We could be in this complex corrective, from this breakout, possibly your ABC corrective, possibly, right? But we're certainly at a significant zone. So do I like this price action? I don't mind it. Again, if I was looking at this as a complex corrective, the market's got to tell me that it wants to move down. Right now, it's looking like we're creating B wave and possibly into C. So if I zoom in a little bit so you guys can see better, I wouldn't be surprised. I wouldn't be surprised if you saw a little tick above this area before movement down, right? I wouldn't be surprised considering how impulsive this is right now. I wouldn't be surprised if we saw that complex corrective or that ABC, because the idea of the ABC is that, you see a lot of retail get stopped out at A wave, right? Usually when trends are not really ready to go. So I like the overall bias, obviously. I don't mind where the weekly is. I don't mind where the daily is. Let's see how price reacts to this area. I mean, where's your trade, Vincent? Where's your trade? So you're in a sell from where? Are you offside right now? Are you basically out the money or potentially losing some money with where you are? Let me know where your trade is. That will give me a better indication, because I don't know where your stop is. Your stop could be here. Your stop could be all the way up here. It depends on your trade. But also what I'll say is it's also if you're in a CAD Swiss short and that CAD Swiss short fits your strategy, then it shouldn't really matter what anyone else says, right? I understand you're asking for opinion, but ultimately, for example, in my S&P trade, I don't really, if somebody's saying, well, I think short, somebody else is saying, an opposing view, which right now they might be right. it doesn't really matter to me because, you know, my stats and my back testing, my data says that I will be coming out of the year at hopefully a plus 20%. And I just go with that. 67480, 67480. Okay, so you've just kind of entered into it now at this resistance zone or old support, potentially becoming new resistance. Yeah, I think your overall directional bias is right. I just worry about this. That's what I worry about. And if you look for these ABCs, honestly, you'll see them a lot. But in saying that, do I think that this chart was extended here from the daily? No, absolutely not. I don't think it's a bad idea. It may just be a trade that you might get tipped out on, and then, you know, it continues to move in that overall direction. You do hear the saying that the market makes the anti-move before the proper move, you know, which is why I like the ABC. Sometimes get retail stopped out here. Stops are out here, the most obvious position. It continues on down. So I don't mind the trade, mate. Honestly, I don't mind the trade. I think it's a good idea. It just may be one of those that you get unlucky on, depending on where your stop is. Depending on where your stop is. So you've got the path of least resistance. You've got the bias to the downside going for you. But let's see if it does decide to push. I mean, if stock markets push and indices push and we go a little bit more risk on, then yeah, you'd expect to see CAD Swiss move to the upside, right? But no, I don't think it's a bad idea. I don't think it's a bad idea. No worries, mate. No worries. Right, so the only other one that I'm looking at today is this USD NOK. You can see my watch list here. Again, I'm in the UAE, so I do my scan about 9 o'clock in the morning, so 8 or 9 hours ago. So a few of them would be off. But there is still this USD NOK that I'm potentially looking at. Where would be a better entry for CAD Swiss? I mean, I would personally, looking at what it's doing now, I'd be interested to see what it does up here. So what it does moving into this area. And certainly if we move into the area where we're a little bit, I use this 20 MA. So when price gets a little bit extended or a little bit climactic, i.e. price action moving like this, I always get a bit worried, right? So if you're looking at CAD Swiss, and again, this is not my strategy. This is not how I trade, but it's something that I notice because I do trade this ABC corrective. So I'd be interested to see, again, because the path of least resistance is down, what price action does coincidentally around that 200 MA, which is, you know, certainly a powerful MA, a lot of dynamic resistance off these MAs and certainly off the 200s for potentially movement to the downside. But again, you'd need that catalyst. So for example, if we kind of came up here using our simple chart patterns, right, and we get something like this, right, your inverted hammer, I get that's a very bad drawing. Obviously, that's a huge candle in retrospect. But if you get something like that, some volume coming in, or even if you get your wick to the upside, as long as we break above these highs, that for me would be like, okay, I mean, some people would call this grabbing liquidity. I don't trade liquidity, SMC, etc. It's a topic for another story. But if I saw something like that, then I would maybe think, well, do we continue on down now? Have we grabbed our stops here? Has retail grabbed their stops here? And we continue to the downside. But I would have to see what price action looks like at that time, because I need the market to tell me when I'm entering something, whether it be in a breakout. I trade a breakout retest as well. I need confirmation from the market. So if it's a breakout retest and we come back, I'm looking for some sort of indication at old resistance becoming new support or old support becoming new resistance to tell me that, okay, market wants to move up. And that's in the form of volume and simple candlestick patterns. You know, that's what essentially I look for. So it's my strategy is relatively simple. So yeah, I would need the market to tell me it wants to move down, because if it's not giving me any indication, then we could see a change of trend. So that would be my opinion on CAD Swiss. UJ. Okay, let's have a look at UJ, and I'll go into USD NOK afterwards. Remember to like the stream, guys, if you like the stream. UJ, well, what's your guys' bias on UJ? That's the first question, and I'll give you mine. I'll give you mine as I go on, because it'll take you a while to type. So as always, top-down approach, weekly down to daily. I've got a bit of a short bias in the dollar, but against the yen, slightly different. I mean, USD yen weekly obviously looks a little bit more bearish. I know we've come from this section, but looking at this price action from here as an overall pattern, I'm thinking that if we get down to this, 126, 127 handle, it looks to be at the moment that price seems to want to move. Again, we could be creating B wave, right? We could be creating this for continuation down. It was bad drawing, but you know what I mean. We could be just in this corrective from this latest move, because if we go down to possibly the 4-hour, I guess we've moved down relatively well. Then you've got this on the 4-hour as well. So UJ's a difficult one right now. I wouldn't be massively comfortable with any position. And normally when I'm not comfortable with many positions, I go to that weekly and I get my overall bias of trend. But with what that daily is doing right now, 4-hour, it's a bit of a difficult one. I have to say, there's sometimes where you have to go, do you know what? I don't really know what it's doing, because you're getting some mixed messages here. Overall trend here, we've had a nice pullback, decent, healthy trend to the downside, but we're stalling here. So are we creating, again, B wave, where we come up and possibly a shallow C, or possibly see up here for continuation down? I don't know if that's, that movement all the way up here is likely, but it could certainly happen. It could certainly happen. See how I was reacting around this area. There's lots of barriers to price, right? Because shorter time frames is counter trend. So there's a lot of ways price has got to go, with a lot of resistance zones or resistance to price to get up there. And whether it does or not, you'd have to wait and see. So, for me, UJ would be something I would just be saying, I'm not interested in even looking at this. Maybe a break above structure here. Would you look at that as longing? Personally, I wouldn't. Where are you considering your key zone? Right now for me, I've got to wait till price gets up here and then potentially look at it from there, just purely because of where the weekly is. This is where your patience comes in. So, yeah, I have to say I'm not. I'll sit myself firmly on the fence with UJ, because it could go either way. Could go either way. Let's have a look at. The smaller time frames do look good for moving to the upside. There's momentum to the upside. It just depends how far it goes. Just depends how far it goes. Savio, what's your take on US 500? I kind of spoke about that at the beginning. I'm relatively bullish on indices. I do have a trade in it, a little bit offside right now, but that's fine. But from an overall weekly perspective, if you kind of zoom, if you scroll back to the start of the stream, or not the start of the stream, or however long I've been on, 25 minutes ago, that's when I talk about US 500. So I'll give you my bias then. But I'm relatively bullish. But I do think right now, these next couple of weeks are really interesting, right? So I think these next few weeks in the market is, yeah, no worries, right? No worries, buddy. Is really interesting because we're at decision point, right? So we're at decision point of, do we fail from here and come back down? In which case, if we break this anchor down here, I'm not going to be confident in that bullish stance. Until that happens, I'm still bullish, right? So until that happens, I'm still bullish. But I think if we do get a break under here, it might be a little bit worrisome. In my head, markets should be down. Indices should be down from what we see in the markets fundamentally. But it's different from what I'm seeing on the chart. So I do think if we get a break above here, this could look really nice. And if you're looking at long-term investments, dollar cost averaging into this market right now I just think it's something you have to do. Are you guys investing long-term investments? Because you've got to be licking your lips when you get real good pullbacks like we're getting now. And if we do pull down again, investment-wise, you just keep buying up. I know cash is an issue for some, but you just keep buying it up. But yeah, Savio, I'd say at the moment I'm bullish unless we break this anchor, right? That would change. But then also you've got the 200 there as your dynamic support. So certainly if you break underneath here, I'll be thinking, well, this is a little bit worrisome right now. A little bit worrisome. That's my take on USD, on the US 500. But great investment opportunity. Right, the last thing I'll just do, I don't know if I'm going over my time, but I'll do this before because before I go. So this is the last one that I'm looking at, USD NOK. And I had a conversation this morning when I was doing my morning stream about it because, you know, I was looking at this from a weekly perspective, as I always do, weekly and daily, saying, well, we've failed to create a higher high here, i.e. your Dow theory, higher low, right? So are we potentially getting involved in a trend change from an upward trending market to a downtrending market? That's not confirmed yet because we've got a break structure before that is confirmed. From a daily perspective, i.e. when I look at counter trend movements and I'm looking at counter trend trades, I'm looking at what's getting me in. And right now, this head and shoulders is potentially getting me in. So I've got my confluence there for a counter trend trade just about. What I'm looking at in the 4 hour, as we create and we go on and create structure, we can see our significant zone ready and being respected here, which is good. Created our initial structure, i.e. our cup or V reversal, whatever you want to call it, but our initial first structure. We're in here, created our second structure by tagging that zone. So I'm looking for USD NOK. And I like the exotics, by the way. I do enjoy trading the exotics. I like how they move. Excuse me. So I'm looking for this because I do not think our secondary structure, and again, I know I might be confusing some people, but this secondary structure, i.e. here, is not enough to digest this initial structure, right? So why I would need a third structure is because if we get price action looking like this in our digestion period, let's say from our initial move, i.e. our first structure, starts to become a little bit more digested. So I'll use the 30 to 50% rule, right? That means that, for example, if I have my cup with handle, I don't want to see this, right? I don't want to see this. I want to see the secondary structure or third structure be 30 to 50% roughly of the range of the initial structure. Hopefully that makes sense, which basically means we're looking at, you know, something like this. So this is 30 to 50% of this. That makes sense. So I don't think this is there yet, but if we get our next one, then it will become valid. So what I'll be looking for is price to come down. Again, this is not what I think is going to happen. This is what I would like to happen in order for me to get a trade. 20 period catch up here, accumulation for a break to the downside. So that's what I'd be looking for, potentially shorting USD NOK. But if it doesn't happen, that's fine. I take it off my watch list and I go on with my day. And that's all she wrote for me today, guys. As I said, not many on my watch list. I was looking at Euro Yen. That's probably gone now. I'm in that S&P trade. I don't think that is going to give me any fireworks right now, which is all right. And we just move on to the next one. It's just one in many. All right, guys. Any more questions? No worries, Mark. Any more? Yeah, no problems. No problem, Savio. I appreciate you joining. Any more questions before I go? If not, always remember to trade safe. I'll be on in another 2 weeks. I come on every 2 weeks. So hopefully see some of you back. Savio, Vincent, Mark. Hope you see somebody's back in 2 weeks' time. And yeah, have a great rest of the week. Have a great end of Q1 and trade safe. Cheers, guys. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you're looking to get funded, check out Superfunded's examination today and get 10% off when you use the code A1 Trading. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day and we'll see you next time.